Divorce is never easy. It's often painful and complicated and something that people just want to get through. So whether you're legally separated, getting divorced, or going to be getting divorced, you'll need to remove the ex from the mortgage typically and assume the loan on your own. And you may be wondering what your options are. Hello, my name is Kevin Brierton, certified mortgage planning specialist with Neo Home Loans. And in this video, I'm going to share with you some simple tips to consider if you're going through a divorce or separation. Often in a divorce, the spouses have to agree to sell the house or refinance the mortgage so that it becomes into one person's name. And if the spouse is going to stay in the house or sell it, that all has to be determined and agreed upon. Now, if you've agreed that you're going to stay in the house and not sell it, what's going to happen with the mortgage? Well, the divorce decree and agreement will spell this out, who's responsible for paying for the mortgage. Perhaps you want to make sure that your ex, though, is no longer financially responsible for paying the loan. And if you both have agreed to keep the house, you might want to make sure that your ex also doesn't get any proceeds from the sale of the house or inherit it if you die. So no matter why you're removing your spouse from the mortgage, you want to make sure you follow these certain steps that really protects you and your ex-spouse and the mortgage lender. So here are some questions that come up regarding the mortgage in divorce situations, beginning with, can I remove my ex's name from the home and the mortgage? Well, first, you need to understand removing your spouse from the home, aka title transfer, removing them from a mortgage, aka a refinance, are two completely different things. So looking at title and the mortgage as being one and the same, that can be a problem because they're not. So question is, can you remove your ex's name from title? So yes, in fact, in a lot of instances, there's one spouse that agrees to take over the house in a divorce settlement. It may be wise to have the former spouse removed as quickly as possible so they won't be legally liable, or you won't have any of the proceeds. If you sell the house, you won't have to pay the proceeds for the other party, or an inheritance, if somebody passes away. But removing one party from title does not, however, remove them from the current mortgage lien. Assuming the loan is in both names, obviously, right at the beginning, the title transfer will accomplish this through a simple deed or interspousal deed. There's a couple different ways to do it. And really, though, the same cannot be done for a mortgage, though. So title transfer can be very simple. Maybe pay $50 or $100 to a title company. But again, cannot be said for a mortgage, which requires one of the spouses to actually qualify for the new mortgage on their own. So let's take a look at those steps if you're talking to your spouse and trying to remove your spouse from the mortgage in this situation. You'll likely need, and not be excited about this news, there is only one way to remove your name, or remove a spouse's name, I should say, from the mortgage. And that is to apply for a mortgage refinance, and that would be only in your name. So why is this? Well, your existing mortgage lender approved the loan in both names with both income situation and both credits there. So giving the lender two sources of repayment. So spouse A and B are both repaying it. That was what was agreed upon at the beginning. So although you and your spouse may decide between yourselves that only one person is getting the house and is responsible for paying the mortgage, that agreement doesn't really affect the lender or impact the lender's agreement that you made. In other words, the mortgage lender can still come after you or your ex, or you, if you're the ex getting the house, for repayment of the payments that are not made. So until you have a refinance and you refinance out of the name of the spouse that's not getting the house and into your name only if it's you getting the house. This means that while you're not living in the house, you still could have it affect your credit if you're the ex that decides to not make the payments. So something to consider on both sides. So make sure you're protected and you understand that just because your name's taken off title from the deed side doesn't mean you're off the mortgage until there's a refinance. You will have to complete a new mortgage application and qualify for the loan on your own. You will need to prove that you're able to make the payments on your own, and the lender will look at your income, assets, debts, credit scores. And if you qualify and your financials really, let's say if your credit or financials aren't strong enough and don't qualify on your own, then you'll have to produce other options. You'll either have to come up with different things like maybe making a larger down payment or asking somebody to co-sign on the loan. There's a lot of different ways you can maybe make it work, but you'll have to come up with a plan to get that qualified. So next step is to remove your ex from title. This is typically done through a quitclaim deed or an interspousal transfer deed. This means your ex gives up his or her rights to the property. This deed is filed with the county clerk office and title on the property becomes updated. Oftentimes, it makes sense to refinance this loan pre-divorce prior to any judgment or situation going into effect. But that takes some planning ahead of time. A lot of people don't know that they're getting divorced, so why would they refinance the house? Oftentimes, the refinance is done prior to settlement agreement. If you can time that out and it works, great. But at the same time, if you're going through divorce, that could become a title issue. So talk to your lender and title company closely on this. If you are updating title on the house in pre-divorce refinance, you're still married, what will happen is you'll need to make sure everybody is okay to understand how they're going to be holding title. Generally, we see, always advise an attorney or title company attorney on this, but generally we'll see somebody that's currently married and they would be taking on their house themselves would be held as a married man or woman as his or her sole and separate property. Okay. Then once the divorce is finalized, you can file another deed to change this as a sole and separate property. Or then it'll be changed to a unmarried man, woman. This is just a few important processes and things to consider when you're dividing property out. Another question is, should I allow my spouse to have exclusive use of the home if I'm still on title? If you agree in the divorce settlement to give your spouse the home, ideally they'll refinance the house into their own name or your name, depending on who's getting that house. This will provide assurance that you are no longer obligated financially as a responsibility of you paying that mortgage. It's not your financial responsibility. And then you'll be able to confidently sign over to the title of the house. So the exception to this is if there's a deferred distribution whereby both parties agree to maintain possession of the house until which time that the courts order the house to be sold. So usually when this happens, there's maybe no longer a minor children living in the house and they have agreed to sell it, wait a couple years to sell it, or a year or 6 months. Another question is, what are the risks of not removing your ex from the mortgage? So here are the primary risks from not removing your ex from the mortgage. Credit can be affected for the ex who gets the house, and if somebody misses payments, it could actually affect either one. It can make it harder to qualify for the next house because the debt's still in your name. The divorce settlement agreement might state that you're retaining, that the spouse is retaining and in the spouse's name for all the mortgages and house expenses, but the credit bureaus don't care which party is taking that and it's assigned to. It's still going to be on your credit and it still can affect whoever it's on their credit. If you co-sign on the mortgage with your ex, the creditors at that point, they'll understand they're going to look to make sure you have on-time payments, even if it's a house you've left and you've signed off on the agreement and divorce papers that's your spouse. So it's an event. If this happened and you missed payments, that can be reported directly to the bureaus and it can cause credit issues. So what happens if you want to buy a new house? Well, there's several things to consider. Think about the debt and if it's preventing you. In most cases, a lender will be looking at a mortgage application and seeing it's normally going to exclude former residence debt if they're going to be buying. But lenders consider this as a legal assignment of debts and will not penalize the departing spouse from additional debt. So sometimes you can't exclude the debts, but you have to make sure there's on-time payments and there's other risks and guidelines that come into play. So sometimes you can exclude the debt, but a lot of times you can't. If if the debt's still in your credit. So get your questions answered up front. If you have a homeownership question related to a divorce, and you might benefit from an in-depth, insightful conversation with a divorce mortgage advisor who's knowledgeable and able to provide you process around this. If you have any questions and want to go through a detailed analysis of your situation, please reach out. Click on the links below. You can give us a call at 480-553-8770, or you can go to mortgagestrategycall.com, and we can help walk you through your options. Thank you so much for watching. If anybody else that you know is going through a tough time like a divorce and you want to help them out, please forward them this video, and we're excited to help. Thanks for watching. We'll catch you on the next video.